And we should be live. Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart, welcoming you back for another monthly session with precious metals expert Andy Schectman of Miles Franklin. He's here with me. Hey, Andy, how you doing?
Great, Adam. Thanks for having me, buddy.
Hey, look, not only do I just enjoy doing these monthly segments with you, Andy, but the feedback from the audience has been great. And actually, people have been clamoring to have you back on sooner than your normal monthly cadence, but we couldn't make that happen. So I'm glad we're finally making it now on the, I think it's been pretty much exactly a month since your last opinion, but the performance of the precious metals has been now in full breakout mode. So as you can imagine, lots of people curious to hear, what does Andy think about this? So I titled this video, How to Play the Breakout. And I'm curious, Andy, one, just your general thoughts. I think if I had told you at the beginning of this year how much gold and silver would be up by September, I imagine you could have thought, yeah, that's in the realm of the possibility, but I think the realm of the possible, but I think you would have said, I'd be shocked if the year was that good. And so, every day now it's sort of like Christmas for gold. New record high, new record high, new record high. Silver futures on the day we're talking here are over $43 an ounce. Finally, it's just a bonanza year for precious metals owners. So I guess, Andy, is this what you've been waiting for much of your career? And how would you play it now, especially given how far the metals have moved so far this year?
As far as I'm concerned, we haven't really seen anything yet. I know that is hard for a lot of people to believe because the public is told that gold is risky, especially at these levels. But this is happening even as the central banks and the big money hoard it as a tier one asset. And look, when I'll break it down as simple as this, and we can get into the minutia, but when the guys running the printing presses are the biggest buyers of gold and silver, this isn't speculation, but a signal. And more than that, and maybe what really I think pushes me over the edge here is that when the smartest institutional money here in the United States flips from net sellers to net buyers, you better pay attention. The United States has been a net exporter of gold for as long as I've been doing this, for almost 36 years. And all of a sudden, we're the largest importer of gold in the world. And the bottom line is you shouldn't trust the government data to guide your moves in precious metals. Their incentives are to mislead you, not to protect you. That is incredibly true. But there is a million reasons in both gold and silver why I would argue this is just beginning. And I'm happy to go through every single one of them as we go through this. I honestly believe this is just beginning. And I know that sounds hard to believe. But no, I think, yes, the performance has been spectacular. Both gold and silver approaching 40% for the year, the dollar down 11%. What's more startling to me above all else is that you're getting nothing from the mainstream talking about this. And that to me should be a guide to people saying, well, geez, if it's performing that well. In fact, just one comment on that. You take a look at the S&P 500 as an example, which has had a massive run, one of the biggest runs ever in the history of the market. And this comes in light of the greatest tech boom since the internet. And yet gold and silver have outperformed the rise in the S&P by a fourfold increase in the last 6 months. So while the S&P is up like 1,600 points, it's only a 9% gain. You're up 37% year to date, 4 times that of the S&P's return. This is the strongest rally in decades for the S&P, and yet gold's up nearly 4 times the return of the S&P. And what's crazier to me, amidst this massive AI boom, biggest tech story ever, the markets may be celebrating AI, but gold is telling a different story where the confidence and the capital are actually moving at them. And I say, where's journalistic integrity? You would think that gold reclassified tier one, massive inflows into the United States, becoming net importers, 4 times the performance of the S&P over the last really 5-6 months. Since 2023, gold's up 100%, the S&P's up 67%. And why isn't the media screaming about this? Why isn't the media saying, oh, by the way, silver is really beating everything this year, including Bitcoin? And by the way, the US government just reclassified it a strategic mineral. What? The US government just put a floor under the price of silver for y'all. And if you don't understand that, then I think that this nonsense of it being too expensive and being too risky is exactly the narrative that the big money, who is wickedly accumulating it, wants us all to believe. Yeah, we haven't seen anything yet, in my opinion, Adam.
All right. Okay, lots to get into there. I'm definitely going to ask you to expound on that last point about silver being declared a strategic mineral by the U.S. government. What exactly is a strategic mineral defined as? What benefit would you expect that to have for silver demand and price going forward? We'll get to that in a minute. Yeah, I mean, like you, Andy, we've talked about how the progression of the demand for the precious metals, gold in particular, 10 years ago, nobody really cared that much. Central banks started buying, the Eastern investor started buying. The Western investor still hasn't really showed up to the party yet. I think that shoe still remains to drop here. And to your point, right now, media is pretty silent on this. So that is a head scratcher. Another head scratcher for me is, I remember the last time when gold hit its nominal all-time high. You turned on a television and there were cash for gold ads everywhere. I don't really watch TV as much anymore, but I'm not really seeing that on the internet. I'm not seeing, all of a sudden the proliferation of billboards saying cash for gold. That's kind of a head scratcher for me. Do you have any opinion on that?
I would argue probably most of the public sold their gold a long time ago, those that wanted to sell it on the way up. It's just been muted. We have this entire generation of investors who believe if returns aren't triple digit, they're not worth your time. And I get it with the return we've seen in Apple and Nvidia and Bitcoin and this massive tech boom. A 30-40% per year return just doesn't cut it. Richard Russell, my mentor, God rest his soul, I talked with him many times, and he would say to me, Andy, if you make 7% a year, you'll go down in the investing Hall of Fame. The public is not paying attention to it. And at the same time, I would argue probably that those that needed to sell gold, look, these would have been the same people that would have said there's no way gold goes above $2,000. And once it did, it probably siphoned out the majority of the weak hands that wanted to let go of their jewelry or whatever scrap gold that they had. It's probably not really as lucrative of a business any longer at these levels. I doubt many people have much to sell anymore. So yeah, it is an interesting point for sure.
Okay, well, look, back to my original question about the breakout. I hear you loud and clear, and I know the reasons why long-term, Andy, you think the price action's just getting started. For the people that owned gold and precious metals related investments coming into this year, who are now all of a sudden, up 37% on gold, 40-something% on silver, probably a triple-digit percentage on their miners. GDX is up over 100% so far this year. I guess the question I'm looking for you to shed some light on is, hey, is this it? Is this the watershed event? Is this where things just run away from here? Or, will this follow sort of general market dynamics where the metals make a huge move, then there's a pullback, then they make a big move again? And it sort of begs the question, if you think it might be more the latter, is it time to either consider in precious metals investments, maybe not necessarily physical bullion that you own, is it time to maybe take some gains off the table and lock them in? Or is it time maybe to put a hedge maybe on some of your mining positions? What does your experience tell you?
Well, my experience tells me the answer would be yes. On not so much on the physical side of things to take profits off the table. You certainly could. It's been a nice run. The mining shares certainly are far more volatile. There's nothing wrong with putting some trailing stops, I guess, underneath your positions if they're up that much. The leverage you get in mining shares is fantastic. It cuts both ways, however.
Mm-hmm.
You know, you got to be weary of the guy who says this time it's different. But I will tell you, it certainly feels that this time it is different. I mean, I'll give you some examples. The United States being a net importer of metal has never happened before. An administration who continues to drop clues and hints that gold and silver are certainly, whether it be reclassified as a strategic mineral or the comments, Trump, he who has the gold makes the rules,
Mm-hmm.
Besant being a self-proclaimed gold bug. We've talked about Judy Shelton, or Senator Lummis, all of the things about gold revaluation. The Federal Reserve just wrote a report on it. Everything that's happening with the BRICS, and this is something that should not be overlooked, and they are massively tied to gold. The fact that now the rumor about everything I was talking about with the expansion of the Shanghai Metals Exchange and the settling in gold outside of the trading and local currencies over Enbridge, they're now talking about, the rumor is they will have a gold denominated repo facility that will be part of the Shanghai Metals Exchange, where you will take gold and use it as collateral with metal held in the Shanghai Metals Exchange and in the series of vaults that are now being built all around the Belt Road. The next one is being built right now in Saudi Arabia, which is very symbolic, but using it as a repo facility for renminbi-based loans where, you know, all of a sudden the Chinese in the Belt Road Initiative, who are trying to help build this ecosystem amongst all of these underdeveloped countries, will take gold as collateral for loans for repo. Repo is typically associated with giving liquidity to the worldwide market by exchanging treasuries for cash and then being able to buy them back at a later date at a higher price. If you can now switch that to gold, my point is that I truly believe we are just getting started. I truly believe with the passage of the Genius Act and the passage of a synthetic demand for U.S. treasuries, we have entered a new monetary system, and gold will be part of it. Silver will follow. Should you take profits? Sure, it's not a four-letter word. You certainly could. Would I personally? No, not yet, because I've never seen a market that behaves quite like this one does, with the fundamentals that are growing at the highest levels. And I guess what I would simply say is that when like I said, the people running the money printers are buying gold, the central banks, you should pay attention. When the most sophisticated institutional traders in this country go from net sellers to net buyers, you better pay attention. And it's just beginning. And then when the US government comes in and says silver's now a strategic mineral, that's just a floor been put underneath the price of silver by the US government. And the massive imports coming into the United States, I would argue there's a floor under the price of gold. Ultimately, I think gold will be tied to a new system, a new monetary system. It will be definitely tied to one in the global South, and I think it will be tied to the Treasury market here, a floor underneath the price of gold. So in my mind, this time is different. There's nothing wrong with taking a profit. It means you've won. But I would say that I think this, you'll look back at it. Look, let me put it this way. Goldman Sachs just came out and said if the market even thinks the Fed loses any bit of its independence, you'll see gold at 5,000 like that. Does anyone really believe the Fed is independent anymore? With Stephen Miran, the architect of the Mar-a-Lago Accord, now being put into the Fed, and the pressure that Trump is giving, and all of a sudden they talk about bending to 25% or 50% drop tomorrow. The Fed has lost its independence, which is nothing new, by the way. You go back through history, the Fed and the president have been intertwined more than you would think. They're telling you gold's going to go higher. And you look at a guy like Luke Gromen, who's as smart as anyone in this industry. He said, yeah, they're going to let gold go much higher, slowly, organically, before they revalue it. So I don't think we're even out of the second inning yet where this is going, Adam. So if it were me, I wouldn't fault someone for doing it.
Okay, inning number two. That's very helpful too. No, I get it. And Andy, we've talked enough that I totally get your long-term view there, the logic of your long-term view, and I share pretty much most of it. Just to be super transparent, because I've been public on this on X. as an investor, when something moves very far, very fast, it's always important to remind yourself that nothing ever goes up in a straight line forever. And sometimes it doesn't hurt to consider taking some profits off the table so you can realize them, you can win, as you said earlier. But also, just put some insurance on the portfolio so that if indeed there is a pullback, or if things just go against your primary thesis, you've got a little bit of protection there that perhaps lets you have some dry powder left over, so that if there is a correction and your hedges pay off, now you've got some funds to then reinvest at better valuations to ride the longer term bull trend. So again, just full disclosure,
that is conventional wisdom. I agree.
Yeah, and in my portfolio, I did put on a small hedge, so quite small relative to my overall position. I'm not going to tell folks exactly what it was, but it was more on the miners, not on the precious metals themselves. It was an options trade. And so I've locked in my maximum downside. And to be honest, I hope I lose all of it. The trade has been going against, the metals have still been going up since I bought it. And I'm actually happy about that, because I'm making a lot more money off of my core position than I'm losing off of this cheap insurance that I bought. So anyways, folks, this is all everybody's personal calculus. But if you're sitting on some really big gains here, particularly in the miners, you may want to consider a similar strategy. Now, Andy, on your, we're only in inning 2. We got a lot of opportunity ahead of us here. I mean, a lot of that opportunity is perhaps gold, true price discovery beginning to happen in gold, and that might be assisted by repricing, by the government at some point in time. And part of that is also just the loss of purchasing power in the fiat currencies from the deficit spending, the money printing, et cetera. I'm curious, finger to the wind, if we're talking 3 years later from here and gold's at a substantially higher price, how much of that price action do you think is going to be due to true price discovery coming in here versus just the purchasing power of the dollar weakening?
That's a good
50,
point.
50, 70, 30.
Well, because I think they'll both be at play, because part of what I believe, want to do is greatly devalue the dollar in order to make manufacturing attractive again. And we've talked about that.
And make the debts easier to repay. Yeah.
Correct. And pegging the back end of the bond market to gold so they can bring back manufacturing at zero borrowing costs. The Mar-a-Lago Accord speaks to a devalued dollar. And so I think a good portion of it will be devaluing the dollar. But let's look at it from a standpoint of price setting, which is really, I think, part of the bigger picture to reach real price discovery. When you have a market where price is discovered, for example, in London and or in the United States, this is the problem, I think, in that the LBMA and to a degree also the COMEX have been setting prices for the entire world that have been massively rehypothecated.
Mm-hmm.
In other words, they sell the same paper over and over and over and over again, fearing or realizing that no one ever stands for delivery, until they now are standing for delivery. And so when you see all of these exchanges being set up around the world, in Moscow, in St. Petersburg, in Shanghai, in Hong Kong, in Saudi Arabia, in Singapore, all around the world, these are exchanges where the people not only have been accumulating tremendous amounts, but they're the ones who understand it a lot better. These are mostly cash and carry markets. Ultimately, I could see a point where the LBMA is on the ropes. And I mean, I really do believe that the LBMA is on the ropes right now in many respects. I mean, there was just an article by a guy named Daniel Gali, senior commodity strategist at TD Securities, warning investors that silver appears to be entering the end game of the current cycle as demand, now driven by renewed investor interest, eats away at the last dregs of above ground supply. Mm-hmm. In an interview with Kitco News, Gali said the free-floating stockpiles in the vaults of the London bullion market could run dry within 7 months if investment demand picks up. They actually only have about 1 day's worth of trading in silver right there. That's it. They have 140 million ounces of silver in London. yet they're trading over 600 million ounces a day. They have 1 to 2 billion in paper claims, ounces, 1 to 2 billion ounces of paper claims standing against 140 million ounces of silver. All of that metal has come back to the United States, and we were supposed to believe that it was under the auspice of tariffs. No, I said from day one, this has nothing to do with tariffs. They're reshoring it. The LBMA is on the ropes right now. And in other words, price discovery has been a function of suppression by the West. I think there will come a point a few years from now where the price setting is done in the East. And the COMEX and the LBMA are rendered not the primary price setting mechanisms of the world. You could see a combination of both pushing gold and silver substantially higher. And if gold is pegged to a new system, which I believe it will, whether it be Treasury market here or backing a new settlement system in China and the BRICS nations, there's a floor underneath that too. And so, yeah, I mean, I think it's both, really, and maybe equally.
So many questions. I have all these ones I want to go back to, but you keep asking great ones. Let me ask you this. So I understand that you are concerned that the East is essentially going to eat our lunch in the bullion markets here for many of the reasons you talked about. And I also want to note too, in addition to kind of the BRICS gatherings, they just had the SCO, the Shanghai Cooperation Organization, where kind of everybody who's not on Team America or Team West, got together, which definitely seemed to send a signal of real solidarity there. So I think that just sort of adds credence to your arguments there, Andy. But the bullion is now making its way back into the U.S., as you've just mentioned, right? Is there a chance the U.S. may wake up to your concerns and say, hey, wait a minute, we're just not going to roll over and lose this battle. We're going to start trying to, amass more of a bullion presence here in the States, and we're going to maybe start putting some controls so that we don't just keep sending our bullion cheaply to the East at any price. I mean, is there a potential here that we don't lose this because we wake up and realize this is a strategic game that we need to actually win?
I think it has happened already. I think that this administration understands it. This is why, I mean, I live on a golf course in Boca Raton, Florida, and if there were 4 feet of snow on the first tee box that I live on, I wouldn't ask my sister to send me my snowmobiles that are in her garage back up in Minneapolis, because I would know it's an anomaly. And this is the exact same thing we are seeing right now. The amount of metal entering this country is an anomaly from anything that we have ever seen, ever. I think someone got into Trump's ear and told him just that this is exactly what is happening. And so I don't know that they will eat our lunch, but I do believe what they will do, and they have been eating our lunch. And I think someone said to Trump, if you don't do this, if we don't do this, our lunch will be taken off our plate completely and totally. So I think it's happening. It's kind of a race right now. At the same time, you have, I think, a race between the industrials and the investors on COMEX. And so there's all of these battles going on between the West and the East, between the investors and the industrials. I think it's just beginning. And I think the price, look, let me explain something to you. Right now, as an example, in London, there is between a 5 and a 6.5% lease rate on borrowing silver. And this just came out of Bloomberg. Bloomberg confirms the London 1-year implied silver lease rate has blasted above 5%, while on September 4th, the JBMA, that's the Japanese Bullion Market Association, Bruce Ikemizu, reported a London 1-month lease rate rocketing to an extraordinary 6.4%. Over the past 2 decades, silver lease rates have usually hovered well under 1%. Even in a tight physical market, they often spike into the 1 to 3% range briefly. This signals a fatal shortfall in deliverable physical silver. Here's the interesting part. Bullion banks trapped by their own over-leveraged promissory notes are unable to deliver on physical contracts, may unleash true price discovery and the revaluation of real assets. That's coming out of Bloomberg. What I'm basically saying to you is that there is a race right now going on for physical metal that has never, ever happened. These contracts were always ways for countries to offset risk, to hedge, for miners to offset risk, to hedge, for companies like mine to offset risk and hedge. No one ever stood for delivery. And now all of a sudden, everyone, including central banks, are standing for delivery. It was always the East. Now it's happening here too. And there's a race. And the fact that it's all coming in here should tell everyone that this is far bigger than we are being led to believe. And it will be a battle. I really do think someone got into Trump's ear and said, we need to do this, we need to do it now. And you can see it by the amount coming in. One other point, Vince Lancy, one of the smartest guys in this industry, says 85% or more of the metal that is going around the globe is not being reported to the IMF. These countries, including the United States, do not want anyone to know just how much is coming in. And we continue to see countries be caught. Oh, sorry, we didn't report it, but the import-export numbers flag it, whether it be Saudi Arabia or China. Both last year were caught taking large imports in and not declaring it. There is a race going on right now, and London is the epicenter of it. This Bruce Ikemitsu guy, the head of the Japanese Bullion Market Association, came out 2 weeks ago and said, by the way, London is trading 3 million ounces per day of deliverable platinum contracts. There's no platinum, he said, in loco Switzerland, means location, Switzerland or London, and yet they're trading 3 million ounces a day. What could possibly go wrong? The price setting that has happened in the West has been outed and will ultimately, I think, be neutered by the massive physical acquisition by not only the rest of the world outside of London, but by the U.S. too. And guys like Tom Luongo say that the target is squarely on the Bank of England and the European banks that have these massive short positions. All of the metal coming back could have very easily covered the short positions by the U.S. banks, who, when they short on COMEX, take a long position in London. They brought all that metal back. And I would simply say fireworks are coming on both sides. And maybe that's why there's such a rush to get all this stuff in and to reclassify silver as a strategic element rather than just an industrial, because we know just how important gold and silver are in the scheme of things moving forward.
Okay, great. And I'm chopping my way to that question about what exactly that means to be a strategic element. But real quick, for months, Andy, you've been talking about how we've been seeing just unprecedented flows of bullion into the country. A lot of that, as you've said, is coming from the LBMA into COMEX, and then people were standing for delivery on COMEX. Has that trend continued unabated?
Yeah.
Okay, so it's not slowing down by any noticeable amount.
Absolutely. Let me just see here. The amount of silver that has come in so far this year. I don't know if I have gold yet, but let me see. Should take me just 1 second. I apologize.
No worries.
So far, the amount of silver that's come in 58 million ounces since late August, 10,550 tons year to date of silver. The amount of gold I have to double check, but I will tell you that just in the first 5 days or so of the September contract, you had well north of $4 billion stand for delivery in gold just in the first 5 days. And so you're seeing billions and billions and billions and billions and billions every single month of gold and silver coming into the COMEX. A lot of it staying there. The vaults are flush. A lot of it leaving. Just the fact that it stays there does not indicate it's not an indictment against it. It's just that these institutions are leaving it within the COMEX in the eligible category, which means it's eligible to be sold, but registered means it is backing those contracts that can stand for delivery. So yeah, these are the stuff that's coming back in is not really standing for delivery. It's sitting in strong hands in the COMEX ecosystem, which would be a Brinks vault in New York City or a Delaware depository. Some of these large COMEX vaults can safely store it for those who, maybe it's a Tesla, maybe it's the US government, we don't know. That's another thing. With all of this metal coming back, with gold and silver outperforming every asset, including Bitcoin this year, where's the journalistic integrity telling the American people that, yeah, not only is gold outperforming all of this stuff amidst the greatest run ever in the S&P and the AI boom. But who's bringing it all in? Why aren't we talking about that? So that level of to me is a contrarian indicator that it's much deeper than we are led to believe by the mainstream.
You think it's setting up for a positioning for something bigger that might be announced down the road?
In other words, I think they know what's happening.
Okay, so thank you. I just wanted to clarify that this repatriation, if you will, of bullion wasn't a surge that we saw that's now over. It's ongoing, as you just confirmed for us. So to your point about how low the stores of silver are in the LBMA, gold, I presume, is also getting, heading in the wrong direction. Platinum sounds like it's on vapors right now, vault-wise. You talked earlier about how so much of the gold that's been in the LBMA and the COMEX has been rehypothecated, meaning essentially there's multiple claims on it. So what would happen? We for years we've heard about people talking about the COMEX being broken, basically meaning like, oh, at some point there's going to be demand for all the gold that's there, and then we're going to reveal that, oh my gosh, it's promised to multiple different parties, right? Sounds like that risk now is much higher at the LBMA. If it were to happen at the LBMA, and folks, no guarantees it's going to, but if that were to happen, what would you expect the shockwaves to be?
The bullion banks over there, trapped by their own over-leveraged promissory notes, are unable to deliver on physical contracts. It would unleash not only true price discovery and maybe the real revaluation of real assets, but these banks don't just trade in gold and silver. These are like the Goldman Sachses of Europe. These are banks that trade in everything. It would set off a systemic chain reaction, and it could push prices of gold and silver parabolic. Because the truth of the matter is that real price discovery hasn't been allowed to take place in gold and silver really maybe ever. It's beginning to, because the only way that you can beat these players who have unlimited funds is to stand for delivery by players that have unlimited funds. And that is what is happening. The institutions across the globe, like all of the central banks, are quietly and slowly standing for delivery. It would set off a chain reaction that would be spectacular to watch. Not only could it bring down some of the biggest banks in the world, it would push prices to levels that people can't imagine. And for people to think that can't happen, and I may have said this on your show before, or I'm not sure if I did, but I would urge people to watch the show between Chris Marcus and Arcadia Economics and Bart Chilton. Bart Chilton also, at right around the same time, did the same thing with Andrew Maguire. Did I ever mention that on your show?
Bart Chilton was a former director of the CFTC, which regulates the commodities. Yeah.
Did I ever mention that on your show, by the way?
You did mention, I think. Okay. It might have been the last time or the time before, but yeah.
Yeah, and in it, he basically says that a large reason why Bear Stearns went bankrupt is because silver went from $21 from $12 to $21, and they had a massive short position, and it more or less buried them. So when you talk about this not happening, look, it could very well happen. And all it takes, or not even that, Adam, if one of these banks freaks out and says, this is just killing us, we are getting destroyed by the price continuing to move higher, and they break ranks and cover, just like that, boom, the whole thing falls apart. Kind of like the London gold pool fell apart. So I don't know. I think that for the first time in my career, all of the rhetoric talking about that, it seems as though not only does this administration understand it, they're taking steps to protect the COMEX by stuffing the vaults. And I do believe that there will be some sort of controls. At the same time, the target seems square on the Bank of England and the LBMA. So I think it would be something to certainly behold, not just in the gold market, but the reverberations through much of the financial ecosystem in the West, I think, would feel the fallout from that.
Okay. So in a situation like that, Mike Maloney, who I think and he's another, runs an online
smart
gold
man
dealer. He talks about a future moment where the world sort of wakes up to what we're talking about here. And he says, when that happens, I hope I get this right, he said, gold will be, oh shoot, I forget what he calls gold. But basically,
Unobtanium.
with silver will be unobtanium, meaning gold will basically get so expensive you won't be able to buy it. Silver will get so expensive because you won't be able to find it.
Yeah, I agree
do
with
you
that.
expect some? Okay, yeah.
I do agree with that. I mean, the big money, Adam, always positions itself ahead of the crowd, and the you can see the big money is doing exactly that. And I think that the fact that it continues to march higher is very telling without the public understanding. I want to read something to you that I think may help explain that moment, right? And it comes from all people, a central banker. And in 2023, I made a huge deal about this central banker and what he said. I'm going to read you what he said after I read you what was just quoted in investing.com about the Polish central bank and Adam Glapinski, the head of it. You think about a moment that could happen. Investing.com, Poland's central bank announced plans on Wednesday to increase its gold holdings to 30% of its reserve assets, aiming to strengthen the country's financial security. In these difficult times of global turmoil and the search for a new financial order, gold is the only safe investment for state reserves. National Bank of Poland Governor Adam Glapinski said in an emailed statement. He is proposing a motion to the bank's management board about raising the reserve target for gold to 30% from 22%. Here's what he said in 2023, coming from a central banker. This caught my attention in a big, big way. And he said, why does the central bank hold gold? Because it retains its value, even if someone cuts off the power to the global financial system that is largely based on electronic accounting records. Of course, we do not assume that this will happen, but as the saying goes, fortune favors the prepared, and a central bank must be prepared for the most adverse circumstances. This is why gold has a special place in our currency management process. You know, he's basically saying, so something happens that blows up the total financial system, whether it be some sort of an outage with the grid or some sort of an EMP. I don't know what the hell he's getting at, right. But to hear a central banker say, yeah, a cyber attack, we do, because it's all based on electronic accounting records. I mean, come on. And that is true. Everyone's money is in the cloud, right? So that's why they own gold. So yeah, I think there could come that time where something happens like that. And, you know, the name of my podcast is Little by Little. It speaks to logarithmic decay. Little by little by little by little, and bang, all at once. Where is that all at once moment? Is there an all at once moment? Sure could be. The biggest money in the world seems to be preparing for it, slowly accumulating it without anyone noticing. Well, they would do that before the all at once moment. You can see the little by little if you're opening your eyes to it. And when that all at once moment happens, yes, the market will be, and I've always said something similar to what Mike said, and I'm a fan of Mike, he's a smart dude, and that is that for people like the outsiders, people not listening to this show, the market will be defined by the price being too high, kind of the way that the public looks maybe at Bitcoin right now. Mm-hmm. For people watching this show, it will be defined by the inability to readily source product, because there are two major mints in North America, U.S. and Canada. The U.S. has been nothing but the model of inefficiency for the last, I don't know, since 2008, continually not meeting demand in a period of time where less than 0.5% of the public owns any. The Royal Canadian Mint, fine, a little bit better, but that's it. You have some refineries across North America. The majority of all the other gold is across the Atlantic. And once something wakes up the collective wisdom of the public, or the collective consciousness of the public to precious metals, just like that, the product disappears. We've seen it so many times, like during the pandemic, and premiums go parabolic.
Right.
The ironic thing of all of it is that it's the opposite thing right now. You have the largest exposure by the retail public ever in the stock market at about 56% ever. You have the highest amount of leverage in option exposure ever by the public, over $1 trillion.
Same with margin debt. Yep.
Yeah, and margin. And the same thing with option exposure. Options, margin, and all in on equity exposure as the insiders are selling and moving the other direction. At the same time, the biggest money around the globe, the central banks, and now the institutional money here in the United States, who are the smartest traders in the world, are all importing gold and silver. What could possibly go wrong as the public has zero exposure to it and premiums are at the lowest level ever? It's the weirdest setup I have ever seen, ever. And I think it's a contrarian indicator to the nth degree of where things ultimately go.
Okay. Real quick, folks, I just want to give Mike full attribution here. He said gold would become unaffordium and silver would become unobtanium.
I agree.
If this event happens, and again, folks, no guarantee this event's going to happen or happen in our lifetimes. I think Andy is getting increasingly concerned about the probability of it happening. But Andy, just to your little by little, your thesis for owning gold and silver isn't predicated on a breaking moment like that, right? In other words, you can make a good return on gold and silver just by little appreciation that you expect to continue happening into the foreseeable future, correct?
Yeah, absolutely. I mean, gold's up 37% year to date, but it's averaged 9.9% since the year 2000, which has beaten the S&P 500 with dividends reinvested, which no one ever does. If they reinvested their dividends the whole way up, gold still has beaten it. And since 2023, as I said, gold's up 100%, the S&P up 67%, amidst the greatest tech boom ever. And so when you talk about the fact that gold is the tortoise, doesn't get noticed the way the hare does, we have a whole generation of investors who think if there's not a triple-digit gain behind it, it's not worth it. So yeah, I do think that it has proven little by little. If I were to tell you what is the best performing asset since 1971, when Nixon closed the gold window, most people would not think gold, but it is number one. The S&P 2, the Dow 3, and silver 4. So since literally for the past 55 years nearly, gold has been the best performing asset cumulatively since that day, and it gets zero attention. But the central bankers, they all own it. They're all doubling down on it.
Right.
They know it. And so you don't buy it to become wealthy. You buy it because it is wealth. And that's the biggest issue, in my opinion.
Yeah. And, look at what they do, not what they say. I swear I'm getting to that silver. What does it mean to be a strategic mineral? And maybe I'll let you answer that right now. But real quick, a question to squeeze in right before it is, how much of the activity in silver, now that, again, silver futures are at about $43 an ounce at the moment we're talking, Andy, how much of that is due to a short squeeze with the big players that have had short positions on it?
That's a good question.
Is that why it's moved so much, or is that still a shoe to drop ahead of here if silver keeps rising?
So I think that is an incredibly intuitive question that you've asked.
Well, thank you.
So yeah, because let's talk about that for a moment. Speculators, after months of little bit of liquidation in the gold market, where the speculators were taking profits, and gold kind of just chopped sideways, they are returning with massive open interest rising again in the futures market. What open interest means is people are coming in to buy more open interest. They're buying more contracts, and price is breaking out again as we see it nearing 27 or 3,700. This is the normal link between purchasing and higher prices. Okay. To your point, and you're the first person who I've talked to in a while that's got this.
No.
And that is that the silver rally right now is driven not by speculation, but I would argue this systemic short squeeze, because you have record high lease rates, you have falling open interest, meaning the speculators the hedge funds aren't buying. You have massive delivery demands, 58 million ounces since late August, 10,550 tons year to date. This points to a shrinking physical liquidity and mounting pressure on the market in London. London shows that they're trading 600 million ounces of silver a day, representing between 1 and 2 billion paper ounces, claims 1 and 2 billion, and they have 140 million ounce free float backing that 1 to 2 billion claims and 600 million ounces a day. So it really means that London basically virtually has no free silver to meet rising investor demand or back the billions of ounces in outstanding contracts. And with the lease rates at that level, it's basically the risk of a delivery default in London is rising. And that is the point where I do believe that what you just said is true, that there are traders that smell blood in the water with silver, and it is being pushed up because of the falling open interest, more by short squeezing than by anything else. And silver is something called a Giffen good, or Giffen good means that as prices rise, demand increases. That's kind of abnormal in investing, but it makes shortages even worse, because as the price rises, you'll get the industrials that say, man, we need to just jump on this now, like Tesla, because we need, so much silver and the price keeps going. Let's just jump in.
Right. They got to lock it in as a hedge. Yeah.
Yes. And so, yeah, really, 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 really good question. And I would say gold's open interest is massive. That's the central bank. Silver open interest is falling a little bit, but the price keeps rising. That's a short squeeze.
All right, fascinating. Okay, well, again, back to the question I've been trying to get to forever. So the U.S. government just declared silver as a strategic mineral. You think that puts a floor under the price of silver?
I do.
What exactly does it mean to be a strategic mineral? And talk about the floor. Where do you think that floor is right now?
Well, I mean, I think it means that big buyers are entering the market, including the U.S. government. And again, companies like Tesla, they're going to be forced to soon stockpile it too, because it is a strategic. Now, it's just something that I think the government acknowledges that we need for national security, whether it be for its military components, whether it be for its industrial applications in electronics and electrical. It's an asset that is depleting in nature. It is falling from what for 5,000 years was 16 to 1, and it is now 7 to 1. It's falling, but it is indispensable. It is needed in so many things that there really is no substitute for it. This is it's called inelastic, meaning that the price, the component of it is integral, but the price isn't as important. If you need a fifth of an ounce for a phone, it doesn't matter if the price goes to $300 an ounce. The phone will just cost a little bit more, but you need it. You compare it to what like a very elastic commodity would be. Think of like corn. Corn is very elastic because you can just plant more fields of it, right? Silver isn't, because it's depleting in nature. And I think that's really the understanding here, is that the government says, hey, in fact, the U.S. government, they have a branch of the government called the U.S. Geological Survey Department. Yeah. They came out a year or so ago and said that they believe that silver could be actually one of the first elements struck from the periodic table of elements as it's disappearing in nature. So I think that's what it means. It's critical to the safety and security, the future safety and security of the United States government. But countries like India and China have realized that a long time ago. This is why China, the second largest producer in the world, as I've been reporting for the last year, is flying all around Central America and all the way up to Mexico and buying doré and concentrate being a byproduct of the mining process, doré, a crudely refined bar before it's sent for full purification, buying it and sending it back, paying double what the West will, sending it back to China for refining. If they're the number 2 producer in the world, what the hell are they doing going out of their way to Central and South America to buy stuff that is not refined, pay double what the West will, pay to ship it back and then refine it? Because they understand it's strategic, it is critical. And in fact, this was something that the folks in Canada noticed last year. They petitioned the government to call silver a strategic critical mineral, not an industrial metal. And I don't know how that played out, but I know they were talking about it a year ago. The U.S. was just late to catch on. It is this administration who understands the significance of these precious metals, not just for wealth, but for the greater picture in terms of not only monetary reasoning, but also like silver, which is one of the unique things about it. It's plurality in uses: monetary, industrial, strategic, military, etc. Critical. And what it really means, is my opinion, is that the floor has been put under the price of silver and gold by the U.S. government. I really do believe that.
So there's a chart I'm looking for, and I'm not finding it here in real time. I've shown it on the program before. It's electrical production capacity, and it contrasts China's with the US's and Europe's. And US and Europe's, they're basically flat lines, and this goes over the past couple decades. And China is almost a vertical line. And China is so far ahead of the West right now, it's just ridiculous. And I think they're adding a US's worth of electrical production every, I think, 18 months. And so when you talk about a strategic asset, it's not just strategic, kind of monetarily potentially, but it's strategic because it's used in a lot of critical industry. But I think the superpowers have realized, look, the supremacy of the future is going to be dependent upon who's got access to the greatest amount of the cheapest energy, and particularly electricity production as we get into the age of AI, right? So presumably that could be a big answer to your question, Andy. That's why they're willing to scour the world for these unrefined products and pay double for them, because they've been heavily investing in their energy grid. The U.S. has now said, look, we're going to catch up. We've got to win this war. So presumably that is going to be extremely pro price of silver too, correct?
Yeah, 100%. And this is when you will see investor demand and industrial needs collide. The market will face, I think, that moment where there is a battle between the hedge funds and the industrials, which will massively add fuel to the fire, because the realization will be that that's exactly what is happening. And when you see the amount of silver coming in the first week of the September contract, as an example, we saw literally almost well over $2 billion worth of silver delivered into COMEX in just the first couple of days of this last week in the September contract. And again, what did I say? How much has come in so far this month? It was so far this month, the first week, because I didn't get the numbers yet for this week, 52 million ounces were delivered on COMEX of silver. So 52 times, your $2 billion right there. So that's just 1 week with 3 weeks worth of data left. This is every month. So someone or some entity with a whole heck of a lot of money is saying, yeah, we want the physical. We don't want your paper promises anymore for these reasons. Now, is it an industrial? Is it a government entity? Is it an investor? So is it someone that needs it, like Tesla or Panasonic or Sony or whatever? Or is it someone who says, you know what, we're going to stockpile this? See, the U.S. government got rid of its strategic stockpile ages ago, and they've always had to go into the open market to buy silver, even to make silver eagles. So I think it's a realization that in the end, it's about having the tools, as you mentioned, to further your society. China's realized that for a long time. They play the long game, and they've been buying this stuff they've been producing gold and silver even when it was uneconomical for years, using their trade imbalance, because they understand in the end, he who has not just the gold and silver, but all of the things. That's why China bought the LME, the London Metals Exchange, all the base metals. They own it, and they're warehousing these metals. They're building warehouses all throughout China that store the metals on the LME. That's why the whole premise of the Belt Road Initiative is partnering with countries that are resource rich and underdeveloped. We will develop your country. We will build the infrastructure. We get a piece of what comes out of the ground. And now we're making it so you can go back and forth on not only on transactions using the bridge technology, which is being rolled out to them, which settles in 7 seconds outside of the SWIFT, at a 98% reduction in fees. You can settle in balances in gold, or you can take your gold that you pull out of the ground all throughout Africa. You can put it into a vault that will soon be in all of the countries around the Belt Road as collateral for renminbi-based loans, like a repo. And so we are getting to a point where gold and silver and commodities are becoming far more important than the paper that has been used to purchase them and to value them for a very long time. The folks in other parts of the world see this clearly. The insiders here, I think, now see it. When will that trickle down to you and I and the rest of us? Don't know. I mean, people watching your show probably have a better idea, but the people who we call friends and family, who are very well read and very intelligent, arguably just read the wrong stuff. and they are being misled and misdirected, with the public who's all in on margin, all in on leverage, on options, and all in stocks as the insiders go this way and gobble up physical assets. It's classic misdirection. It's the art of war. They're winning. Thank God someone in this administration, in my estimation anyway, clued in this President Trump and this administration to the importance of getting on the bandwagon.
Okay. All right. Well, look, we're coming up near the end of the hour here, so I want to start trying to land the plane a little bit. There are a few topics that I think we're just going to have to revisit because they.
And I have no time constraints. I know you might, but I don't. So as long as you want to go, let's do it.
Oh, thanks. All right, you're making me the villain here because I'm going to have to
I
wrap
don't mean
up
to do
relatively
that.
soon. No, I have another interview coming up with Sven Henrik, by the way, and I know folks are excited to hear from him. It's been a while since he's been on the program. All right, Andy. So one of the ones I think we'll punt, unless you've got a short answer to it, is the significance of the Genius Act. You mentioned it very briefly early on. I guess why don't we just go there real quick? So Genius Act is really about helping stablecoins thrive. How do you see that?
It's not. It's nowhere near that. I think what it is, it's about providing synthetic demand for the U.S. Treasury.
Right.
That's what it
it's
was
to
backed
help
by.
them thrive so that they can then
Yes.
buy treasuries.
Yes.
But tie that back to gold then.
Well, I just think that what it really means is that the world is dumping U.S. Treasuries. There's far less demand for U.S. Treasuries, and the U.S. government wants to, in essence, it's almost like yield curve control. They want to hold the front end of the market low, interest rates, to finance the workings of the government, giving it synthetic demand by the purchase of these stable coins. It goes hand in hand with my bigger picture, and I'll try to do this in 1 minute, and that is you let gold, you revalue gold. You let it go much higher first, and then revalue it to a level that massively devalues the dollar. That's what revaluation of gold is. It's to devalue the dollar. You peg it to the back end of the bond market so that you can have zero borrowing costs on your long-dated treasuries to bring back manufacturing. And with a massively devalued dollar, you can sell your products to the world. And in essence, it is a part of a process of defaulting on the world reserve standard, not defaulting period, but defaulting on us being the world reserve. It's something we can't do anymore if we want to have strong manufacturing, and we must have strong manufacturing. So you devalue the dollar, you peg gold to the back end, bring back manufacturing at zero borrowing costs up front, and then you sell your goods to the world at a massively devalued dollar. That's what it's all about. So if you're going to have zero borrowing costs, and it's going to be about gold, how do you finance the government? Well, you call it the Genius Act, and all of these stable coins will finance the government because they're all buying U.S. treasuries that no one else wants to buy. I think it's interesting. They call it stablecoin backed by U.S. debt. Not real stable, but a interesting plan to find demand for a diminishing demand vehicle. That's critically important.
Interesting. So we're hearing news that existing stable coins like Tether and whatnot are actually starting to buy precious metals. So it sounds like the intent is for them to become a very important marginal buyer of treasuries. Do you see them potentially becoming increasingly important buyers of precious metals over time?
Absolutely. And mining companies too, they're talking about, but why would that help the US government? Oh, that's right. We're going to peg it to the bond market. We're going to let it go higher. So the demand coming from all of if you buy treasuries, it lowers interest rates. You buy gold, which pushes up the value of gold and further devalues the dollar. It's genius. I mean, no pun intended, I guess pun intended. It is genius. Diabolical maybe, but genius. Synthetic demand. So yes, I think I think the folks at Tether were probably given, a talking to by the powers that be and said, we're going to give you a ticket to unlimited riches, but here's what you're going to do. You're going to peg these with not only U.S. treasuries, maybe with Bitcoin and with gold, because these are the things that we want to do to not only devalue the dollar, to back the treasury market and to pay off our debt. 100%. They already do own gold, and now they're looking at buying gold mining. They'll continue to buy gold. The price of gold will continue to rise because that's what the U.S. government, for the first time, wants. And that's part of their plan, I believe. Yeah, good question.
Okay. We're going to end with a user question here. I'm going to squeeze in one before, Andy, which is just kind of back to asking you about how to play this breakout in gold and silver. What I'm hearing from you is ride it. If you want to, maybe take a page from Adam's book of you've got some really big gains, maybe particularly even on the mining side, which is a lot more volatile. You want to buy some cheap insurance in case there's a pullback at some point here. Not a bad thing to do, but just don't get shaken out of your core position because you think that's going to keep on rising for a long time for all the reasons you just mentioned. For somebody that doesn't have any exposure to the precious metals, my guess, and correct me if I'm wrong here, you would say just hold your nose and buy in, get your foot in the door, get an initial position there, and then I presume you would say, just for both parties, existing holders and newbies, as long as it's not like a dangerously large percentage of your overall portfolio, just keep dollar cost averaging in. I know that your father started that with you, and you still do it to this day, correct?
Yeah, I've been buying every 2 weeks for 36 years. Is the greatest gift I've ever been given. The gift of not only letting compounding of time be my friend, but also to pay myself, my future self, pay myself first.
Mm-hmm.
The concept of cost averaging is the only way to smooth out uncertainty. And so, yes, I do. It's just get on a regimented path, because if I'm right on this, and I do think I am, again, either I'm stupid to say it publicly or I'm onto something. I don't know which one or the other, but I do believe very much so that gold and silver are now taking on a new role in this country. And they'll continue to go higher in the face of a devaluing dollar. So yes, I'll say it the way Rick Rule does. If you save in dollars, you're destined to go broke. If you are not a contrarian, you're destined to become a victim. I believe that completely and totally. So the worst thing you can do is to keep your assets in US dollars. And to your point of putting something out there to protect yourself, trailing stops are usually things that can kick you out of your position, but doing what you did is a little bit more sophisticated, but also maybe smarter. And that is to buy some options that allow you to protect your downside, and the maximum risk is the cost of the option, nothing more. Not a bad plan, not a bad strategy, but yeah, cost averaging will make this a way for you to continue to accumulate and smooth out the uncertainty of markets that do not always just go straight up, of course, but will have pullbacks. And that's sound advice as well.
Well, thanks. And just on that point, if you're interested in perhaps exploring, an options hedging strategy, but you've never done it before, highly recommend that you get the help of a financial advisor who is well practiced in them, and they can show you how to do it. You're more than welcome to talk to one of the ones that Thoughtful Money endorses. There's the URL, thoughtfulmoney.com. Just fill out the short form there. Tell them you want some help on understanding options. They'll happily sit down with you, explain it all for free. There's no expectation or commitments involved. They'll just do it to help you out. Andy, I lied. 2 more questions for you, not one.
You got it.
This fellow asked, of course, I just lost it now. Here we go. John asks, how hard will it be to sell gold when the need comes? And several people said, hey, that's actually a really good question. So we're at some point in the future, whether you just need to sell because you're at a life stage where you got to start unloading, or Andy Schectman comes on and says, hey, everybody, we've had the big event I was expecting. I think gold, silver may have a rockier ride ahead of it, and therefore it's time to start taking some of your winnings off the table. What will it be like to sell? Will you just have eager buyers everywhere? What's the best way? And here's a good question, just practically, what's the best way to sell? Is it to trade with somebody else? Somebody mentioned, well, you'll just, buy a house with gold. I mean, you could do direct trade like that if someone's willing to accept it. Or is it better to go to a professional dealer like your organization?
Well, I mean, I think it gives you options when others don't have any, perhaps. It is incredibly liquid. It always has been. It's very easy to sell. I think it could get to a level where selling it, you'll see where local coin shops go out of business because it's too expensive to keep, to ensure that your shop just by inventory alone.
Oh, interesting.
But I think that you would have, with a company like ours, it would be incredibly easy. We make it very easy. We lock it in. We send you FedEx air bills. You ship the stuff back. We wire the funds immediately as soon as it comes in. It's been money and wealth for 5,000 years. There'll always be demand for it to some degree with major dealers. I could see it, the availability of people who have enough money, like Mike Maloney says, what did he say? Unaffordium. You're going to have to deal with major players, but it's very easy. We can buy back any amount very easily on a handshake snap, lock it in, send you the FedEx air bill, you ship it back, and it's done. It's not hard at all. It will be easy to sell. So, but maybe not as many people will have the funds to buy it. So this is one of the benefits of establishing a relationship. So, people who are buying gold bars at Costco, you can't sell them back through Costco. You never realize how important a relationship is, Adam, until there is a need or a problem. And that's one of the things we're very strong about,
That's a
is
great point.
developing relationships. So, and so you call me, look, if you called me, Adam, and said, hey, I need to sell, bang, I would lock in whatever amount you want, send you an invoice. I would send you with it a FedEx air bill with insurance put on it. You go to FedEx with the box. You don't even have to tell them what's in there. We've insured it. Gets back to us the next day overnight, and we then wire your funds or send you an overnight check. That's how it's always worked.
All right, and let me ask you this question, Andy. So for years, many years before I met you, I would encourage people to buy at least some of their gold bullion from a local dealer for that relationship reason. And part of the logic was you want to have a relationship with a gold dealer because there are going to become periods of time when inventory is going to become tight. And the dealer is not going to be able necessarily to fulfill every transaction. And so you want to have a relationship really for two reasons. One, if he's got limited inventory to sell, hopefully he'll prefer to sell to you because you're a valued customer he's been doing business with over the years. And when you go to sell, if you're selling your product back to the same dealer you bought it from, he's going to trust it and he's going to be willing to take it back from you. There's not going to be any issues about provenance or quality, integrity of the metals itself. So do those benefits extend to working with a firm like Miles Franklin?
Yeah, we guarantee the highest bid price in America if purchased through us. Always have, always will. And I think they do. I think relationships, we've gone so far astray from relationships in a world that is so impersonal with big box stores and emails and texts. I'm old school. We've always been old school. This is why we have a very small capability of purchasing online, but we do everything through relationship. And I will tell you, it is my honest to God opinion that gold belongs in an analog world, not the digital world. And I think relationships are far more important in this respect than it sounds at first blush. And yeah, for my clients, all my clients have my cell phone number, including those of yours that I've worked with personally. And accessibility is something that's very important to me, as is maintaining, these relationships. God forbid that you get people coming back to you and saying, he didn't treat me well. We go out of our way to establish relationships and make it good. And that's why I'm so proud of the fact that, above all else, I'm proud of raising my children. I'm also proud of the fact that in 35 years, I've never had a customer complaint. It's like another child to me. My business, which is something that means the world to me, is something that we've taken great care of. And the people that have been kind enough to work with us have never seen fit to issue any legitimate customer complaint ever. And that's because relationships make the world go round. And I think people forgot that along the way in a world that has become rather impersonal. And so, yeah, to me, it's everything. And we will always go out of our way to help your people. We will always guarantee them the highest bid price in North America, period. I will say that right here in front of you. I will always guarantee the highest bid price. And we've never had a problem meeting that ever, because I can see through what's called the the certified exchange, the CEE, I forgot the acronym of it, but there's 1,500 dealers. I can see all the bid prices that all the dealers are bidding, and we always are the highest bid price in America, always. So that's an easy one for us.
All right. Well, thank you. And I really do very much appreciate it. And it's turning into kind of like a love fest right here, Andy. But, since you've started coming on this channel as Thoughtful Money's endorsed, officially endorsed precious metals provider, a fair amount of people have gone your way, and the feedback that I've gotten from them in terms of the quality, the high quality of the service and the high personal touch has made me feel extremely good about this relationship. And
amazing.
You
and I'm okay
deliver.
with Love Fest, by the way. We
Yeah,
can Love
yeah.
Fest all hour if you'd like, but I'm okay with it. But again, and I try to be sincere. I'm not the smartest guy in the world. I work real hard, not only to find information to talk about, but also to maintain that level of trust with the people that do business with us, and respect and availability. So no
Right.
one's perfect. We try our best, but yeah, there is something to be said for a relationship. It's very important to, I think, where we are going.
Yeah, and I think, folks, a good just primary evidence of this is Andy comes on the channel every time I ask him to do so, no questions asked. When he comes on, he's like he is today. Hey, you need me to go long? I'll go as long as you want, right? I mean, you really just make yourself fully available to your partners. It has been a bit of a love fest too in the comment section, Andy. I'm guessing you haven't had much of a chance to look at it because I've been throwing all these questions at you. But
I can't see it. I see you on the monitor that I look at. I can't see any of the questions. I'll watch it later this afternoon.
Okay, well, here's one saying,
Thank you,
Andy
John.
Schectman for Treasury Secretary. Somebody said a nice thing about me for doing so many of these videos, referring to me as the Cal Ripken of podcasting, which was
that's a
very
record
sweet.
that will never be broken, by the way. Cal Ripken's record of consecutive starts will never, ever be broken. I'm a big baseball bobo.
Yeah, hey, he was phenomenal. So, I mean, look, I'm no Cal Ripken, but even just the comparison is a huge honor. So anyways, Andy, thank you. Folks, I do want to note too, I did see some back and forth going there in the comments, a little bit of bickering between the gold and the Bitcoin crowd. Maybe we can talk a little bit about this next time, Andy, but just, hey, folks, end of the day, if you're on Team Sound Money, you're part of the same family. Let's make sure that
Can I have 10 seconds to address that?
Yeah.
10 seconds. This is why I brought Michelle McCory on board, because we see the world the same way. We both go into the same door because we see the world the same way. And to be mutually exclusive of one another is silly. It's as silly as a mud wall. Not only is your understanding of monetary history and the problems that are facing this country better by having exposure to both, your portfolio is a hell of a lot stronger by having a sampling of both. It doesn't need to be one or the other. And that is the mistake that both crowds are making, not just the hard money, but also the Bitcoin. Let's just be tolerant and complementary to each other, and you'll be a lot better off. And my theory is you take some of the profits of your Bitcoin, you put it into gold, you leave your Bitcoin there. Every time it gets up by 10 or 15%, take some off, put it into gold and silver, leave it there. It goes up, take it. The point is that it doesn't have to be one or the other. You're a whole hell of a lot better off on every metric by having some of both. And if one goes to the moon, I guarantee you the other one will follow it, because they're both going up, not in and of themselves arbitrarily. They're both going up in the face of a dying dollar. That's why I think they're both a lot better to own together instead of fighting with one another. Is silly.
All right, thanks. All right, well, so just in wrapping up here, Andy, for folks that would like to get some guidance or actually get some product from your company, I just want to make sure I put up the call to action here. But
Info
basically,
at
they should be
milesfranklin.com.
Yeah, info@milesfranklin.com. There we go, folks, right there on the screen. You fill that out. The email will go to Andy directly, or Andy and his team, and one of them will get back to you right away and handle.
Make sure they put in the subject line or in the body of the email where they've come from. It's very important that we track that. Any questions you have, nothing's off limits. If you just want our price list, now one comment on the price list, we try and update it 2 or 3 times a week. It'll be amongst the best in the industry. If you find better pricing, let us know. We usually can match it or beat it, but it'll be amongst the very best in North America to begin with. Or any questions, if you want to be contacted, please put your phone number down. Last thing, if you don't get a response within a few hours, please check your spam. 1 out of every 20 of these will go into a spam filter coming from a corporate server like ours. But any questions, just want the price list, precious metals, IRAs, anything you've heard here or questions directly from me, please let us know. Make sure you put that it came from this podcast, and we're more than happy to entertain any questions.
All right. Thank you so much, Andy. Last, folks, just in closing up here, please let Andy know if you want to have him continue coming on every month like this. Please vote for that by hitting the like button and then clicking on the subscribe button below, as well as that little bell icon right next to it. And in addition to emailing Andy there at info@milesfranklin.com, just a reminder that our fall online conference is coming up pretty fast now. It's really just a little bit more than a month away. It's going to be Saturday, October 18th. If you can't watch live, don't worry. Everybody who registers will get sent a replay of the entire event, all the presentations, all the live Q&As. Andy is going to be one of the featured speakers there, so we'll get his latest, and we'll also do some pretty liberal live Q&A with him then. We will also have a lot of great folks on there. You've heard me talk about them. Lacey Hunt, Jim Grant, Judy Shelton is going to be there. Darius Dale, Michael Howe, Sven Henrik, I just mentioned here. Lynn Alden's going to be on as well. Stephanie Pomboy, Grant Williams, a few other names I haven't mentioned yet, but it is just a murderer's row of some of the top minds in macro in the markets coming at a time when we're heading into a very uncertain year. So anyways, folks, if you haven't yet registered for the conference, go buy your ticket now at thoughtfulmoney.com/conference. Andy, my friend, thanks so much. Another great discussion with you. Again, just value your insights, your expertise, but also just your partnership. You're a great man to work with.
Couldn't echo your sentiment any more than you just did. And thank you very much. And I'll look forward to picking up where we left off somewhere real soon. But hope you and everyone else stays well. And thanks for letting me be here today.
All right. And everybody else, thanks so much for watching.